Welcome to the BF Anderson Technical Report for March the 8th. Let's get right into it here. Amazon, one of the leaders. The market leadership right now really appears to be Netflix, Amazon, software platforms, or even what we would call enterprise software and biotech. Now, the thing to realize about these particular securities and this leadership is that the market is starting to take more of a growthy type of personality where the growth stocks are starting to lead. And you know, growth stocks are all about finding something good and getting there before the next guy. Now, the next guy are the big institutional funds, mainly the mutual funds that will buy these shares as they climb. So you can see here with Amazon, we've got, you know, a nice uptrend here. Everything looks very good here. Now, you know, one caveat on Amazon, and one of the reasons I have a problem with the math is this is now an $800 billion company. So if your goal is to double your money in an investment, well, that would mean it would go to 1.6 trillion, and that's like 6 Walmarts. So just kind of be aware of the fact that, you know, size does matter, and I'm looking elsewhere. Now, Netflix has been just absolutely smoke up a chimney. And if you think about the history of Netflix, you know, they started out when they were just mailing DVDs to you, and then they migrated over to doing movies over the internet where you could stream the movies. Now they're doing original production and programming, but the big thing coming is they're going international with this. They're going into China, Latin America, and India. By the way, they just won an Academy Award for the best documentary. So Netflix, compared to Amazon, you kind of have to realize Netflix is about a $100 billion company. Can it become $200 billion? Sure, it is possible. Whereas 1.6 trillion, I just don't know. Now, another company that's as an example of software platforms. In other words, a software platform, all these stocks, and you're going to find right now that the market leadership is basically all software platforms. I mean, Amazon is a software platform. Netflix is a software platform. And this little company right here is a software platform called Shopify. Now, Shopify is basically this. If you go to a manufacturer, and I'll give you an example, Tecovas cowboy boots, made in Mexico. You want to buy the boots directly from the manufacturer. You're going to save the most money that way. Well, Tecovas has a Shopify platform where they can provide essentially the same level of e-commerce transaction that Amazon can. So Shopify is working with Amazon in more of an advertising type of relationship, but this could be a big deal as we see the e-commerce businesses continue to take off. Now, here's an example of a biotech. Now, the biotechs is clear as a bell what's going on here. It's called gene therapy, and it's where they're manipulating your genes, genetic work, in order to cure cancers and so forth. Well, BeiGene is out of Beijing, China, and this is an example of what's going on here with these biotechs. I mean, you can see the dramatic up move. I mean, this company went public back in 2016 at around $25 a share, and it's already up to $150. So they must have something. Gene therapy has been really given a lot of credibility by the acquisition by Gilead of Kite Pharmaceuticals. Also, Celgene has bought Juno Pharmaceuticals. And by the way, Celgene is in a joint venture relationship with BeiGene. Now, what I want to talk about here is the S&P 500 index. The people that I'm working with, the various people I work with, are of the opinion that what we have today is very similar to 1995. So the similarity, the big similarity is that prior to the move in 1995, there was an extensive period of consolidation where the market really didn't go anywhere. So when the market doesn't go anywhere, it kind of builds up steam. It builds up, you know, potential steam. And so what happened here is we got, and I'm using here moving averages only, no price. I'm using the 10-month moving average versus the 20-month moving average. Remember, this is Louise Yamada's favorite indicator, and she looks for the golden cross or the death cross. Well, we can see here that in 1995, February of 1995, we got the golden cross, and the S&P 500 rose for 1,895 days, or 213%. Now, we run a model portfolio here at BF Anderson and Company. We started that model portfolio right here in June of 1995, and the model portfolio climbed approximately 1,300% because we were in what you call a growth stock cycle. In other words, the growth stocks start dominating the market. So are we in a growth stock cycle today? I sure hope so, because it would be real exciting and an excellent time to be investing. So on in June of 2016, right here, we got the same golden cross that we got back in 1995 after a lengthy period of consolidation. So if we repeat, the S&P 500 repeats what happened in 95, and this is not a prediction, it's just a what if. If it repeats, that means that the S&P 500 would climb to 7,400 by March of 2022 if the same thing happens that happened in 95 to 2000. Now, why do growth stock cycles get started? They get started because confidence in the economy gets strong enough where people start believing the earnings estimates of these growth companies. Whereas when you're in a bad economic situation, nobody believes the estimates, and they'll end up just doing only investing in real defensive type names like utilities and consumer durables, things like that. And so what's happening now is that we're starting to see the economy improve. And the estimates are, I'm just telling you, the estimates on earnings out there are exceptionally good. Now, prior to the move in 95 and where we are now, we've had a lengthy period of just a long base, market going nowhere, bear market, rally, mini bear market. Now we're breaking out. We got the golden cross, which was what I mentioned in the last slide, in June of 16, fourth quarter. So we got a golden cross buy signal, and we could stay on this signal for years. The people I'm working with are telling me that they believe we are in about a 5-year bull market. So it's looking good. We've had a long consolidation, a lot of bear markets. People are disgusted with the stock market, so therefore there's a lot of fuel, and they'll come back. All right, let's look at the top 5. Grubhub continues to make new highs. This has been a really tough one for me because we did own the stock, and I just got frustrated because there's a lot of competition in this area. I mean, you have Uber Eats, and then you've got another company out of Taiwan that's getting started. But this looks to be a winning situation. We'll have to keep an eye on it. This one here, Match.com, this is another software platform hitting an all-time new high. Has to do with the dating business, people meeting other people. Netflix continues to make the top 5, all-time new high. Stock is in a very strong uptrend. Again, another software platform. So be aware of that. Software platforms, and here's biotech, Sangamo Therapeutics. So we're seeing software platforms, biotech, Netflix, Amazon. That's basically what we're seeing. Now here's another software platform, Twitter. And it's hitting an all-time new high. This is what Trump uses to send out his twits. Well, anyway, things are looking good. Pay attention to the software platforms, biotech, and Amazon Netflix, and let me know if you have any questions. Thank you.